This segment is sponsored by Hilltop Wealth Solutions.
Eric Brenner from Hilltop Wealth Solutions is a certified financial advisor with nearly 30 years of experience. And today he's back with tips on how you can still save and make the most of your money. Take a look.
Well, Eric, I think the last year has really taught us about unpredictability, especially when it comes to having an emergency fund. You know, what do you recommend as far as an amount to have in your emergency fund, and how important is maybe the interest rate of that particular account people are using to build that fund?
Yeah, so an emergency fund would be considered, things that, come up, larger car repairs, home repairs and so forth. So there's a couple different ways to approach it. Number one is the standard from the Certified Financial Planner board is 3 to 6 months of living expenses, expenses that utilities, food, those kinds of things. So 3 to 6 months. The other way to look at it is 10% of income. So if you just take your annual income and you look at 10% of income, that should be a pretty suitable emergency fund. From an interest rate perspective right now, I wouldn't really worry about on your cash reserves emergency fund how much you're earning in interest. It's really there for the emergencies.
So what do you suggest for people that really want to build up a high amount of savings? Would you look at a 401k or an IRA? Is that the only option, and is there a better option?
So what I first recommend is having enough in that emergency fund. And then the second layer is to, yes, if they have a option through their workplace, a 401k, especially if there's a match, don't give up free money. So make sure that you're putting away in a 401k. And we recommend there an easy start is 10% of income, long-term savings. So if you have a 401k, put in 10%, okay? You won't feel it because you're saving money on taxes if it's going pre-tax, or if you do a 401k in a Roth, you're saving at least some money on taxes. You won't feel a big hit over time, but that's the way to save. But you really want to make sure you have that cash reserves first, just to make sure you can pay for those expenses that come up.
Well, speaking of those cash reserves, is it worth shopping around to different banks to find a better interest rate, or do you recommend just staying maybe at the bank that you're currently at?
Yeah, so shopping around, you may be able to find a little bit better interest one over the other. One of the things that folks can do is they can go to bankrate.com and they can look at different rates around the country. We actually shop for clients CDs from around the country, so we have ability to actually look at rates. But I will tell you that it's pennies difference. We are in a low interest rate environment. So if someone's looking at, wanting to buy a house right now, finding a home is a real challenge. Our realtors that we work with have said there's been times where there's been 18 to 20 offers on a home because interest rates are so low. But so if you're a saver, you're not getting a lot at the bank. So I would not go any more than 1 year CD because right now interest rates are probably going to stay low for at least the next 18 months or so.
Well, let's talk about those CDs again. What kind of option would you recommend to really yield the best results utilizing a CD?
Okay, so again, I would not go more than 1 year right now. So you could look at certainly your checking account type, that's your cash reserve. A money market account may get you a little bit better. And of course, if you have more money, you could get a little better from the bank. The next level would be a CD that you could do. And then you could really look into something that would be short-term bond investments. So you could work with an advisor and put together a portfolio. And we have portfolios that are very, very conservative, but yield much better than CDs. What I would caution people on is try to avoid the fixed type investments, fixed annuities and so forth. They may give you a bonus up front, a little bit better, but long term, your interest rate's not going to be much better. You may be locked in for a long period of time. And so you want to have flexibility with that type of money.
Well, you had mentioned interest rates, specifically when individuals are looking at maybe buying a house currently. Do you potentially see those rising in the future, or is this something that people really need to jump on at present?
Yeah, so I don't see them rising for a while. We're thinking that we're going to have, our economic indicators are right now that we've got our dial turned up, we call it. And so things are looking good. And we think interest rates are going to stay low, as I said, for at least 18 months. And so, so I don't see them rising. So if you're sitting on money in cash, it can mean, someone that has $100,000 earning 0.5%, $500 compared to where they could earn 3 or 4%, that's $3,000 to $4,000. It's costing them $3,000 to $3,500 a year. So that's a risk. It's interest rate risk. So really don't see those interest rates changing or going up much.
Well, Eric, before we run out of time, I know you always bring a special offer for our viewers of Hometown Living. What offer are you presenting this morning to us?
Yeah, we do. And, I want to help people make good decisions. We want to help our community make good decisions when it comes to retirement. So we're offering up this book from Ed Slott that we use a lot with clients. It's called the Retirement Decision Guide. And all they got to do is call that number, that 574-212-0446. And we'll get them a free copy. It's a really great guide and gives you some really good practical steps.
Thanks, Eric, so much for joining us once again here on Hometown Living.
Thanks, Jackie.
To get your copy of that great Ed Slott book, give them a call at 574-212-0446, or you can always visit them on hilltopwealthsolutions.com. May is Motorcycle Safety